particular, there's going to be some specifics on the webinar today, obviously throughout New England more specifically, but with the status of COVID, what we've seen in terms of vacancies, what landlords are doing, what they're not doing, and there are going to be a few items regarding the lease that, I mean, it's interesting since we've been around for 26 years, where dentists unfortunately have been one of those tenants that continually get taken advantage of. This is one of those components of the practice that most love the clinical side and unfortunately hate the business side, particularly the lease. It's a lot to understand. There's legal jargon, and unfortunately, there are mistakes or risks and exposures in your lease that maybe they never come up, absolutely, but when they do, they can cost hundreds of thousands of dollars. So we're going to touch on some of those components today and an update on the real estate market, what we've seen, where it's trending, and depending on situation, we'll go through some high-level kind of examples and situations that we've been seeing. But again, I highly encourage. I want this to be very interactive throughout. So please ask any questions that you have throughout the webinar, and I will be opening the floor at the end as well. So to kick off the webinar today, I do want to take just a quick poll to get a sense of the registrants and attendees on the course here. It helps me cater my presentation and the course to yourselves as best as I can, or cover any topics that might be necessary between the difference of various different situations as well, and what you're looking to learn. So take a moment, please fill out the poll. It'll help me cater the course as well. But I'm your presenter today and one of our keynote speakers. So my name is Ryan Cathers, and I'm the manager of healthcare leasing here at Cirrus Consulting Group. And really, it's unbelievable, the real estate market. So whether you're in downtown Boston, over to Springfield, Hartford, throughout, there's going to be a different variance, and we're really going to see that today in terms of where you are more specifically. Now, I want to start off with three numbers: 85, 54, and 80. 85, 54, and 80. 85% of dentists have a lease that can prevent them from ever selling the practice. 54% of dentists across North America are overpaying in rent. Now, the other 46% believe they're overpaying in rent, but only 54 are actually overpaying in rent. 80% of landlords structure the lease to give them the right to at least 50% of the proceeds when the practice is sold. So 50% of the proceeds when the practice is sold. If you sell your practice for $1 million, landlords structure the lease, 80% of them, to receive $500,000 of that. 85, 54, and 80. Now, I think it's important to know a little bit about us, kind of who we are, what we do, and how we support the dental community. As obviously you're on this webinar to learn a little bit of the expertise and insight into the real estate component of a practice. And this is a big part of it. So we're a healthcare and dental specialized tenant representation firm who were founded by dentists for dentists in 1994. So we're celebrating our 26th year. We've now negotiated over 12,000 dental and medical leases since inception. And the way we're unique and really across the country is that we have everything in-house. So we have an in-house legal team comprised of highly experienced real estate attorneys and lease negotiators with a background of healthcare and tenant representation. We have an in-house leasing team that have access to rental rates and comparables in any given market. And we have an in-house consulting team that essentially work alongside legal and leasing teams to really help develop a strategy for the negotiation. So it's a very collaborative effort. Now, on an annual basis, we represent over 500 doctors each year throughout North America. And we deliver over 100 CE and continuing education accredited seminars on an annual basis. So typically, again, these are in person as a seminar. Now, obviously, given everything in the world right now, everything is moving to online. So a little less personable, less face-to-face, unfortunately, but nonetheless, certainly important content to learn. Now, we would typically lecture at most of the major dental conventions as well. So the Greater New York, Pacific Dental, as many of you are familiar with, the Yankee Dental. So I do recognize a few names on here. I was trying to think if we had met at the Yankee over the last few years, and the California Dental as well. So we truly work with dentists nationwide. Now, the purpose of today's webinar is fourfold. Firstly, we're going to go through an update on some general market rental trends and rental rates. We're going to discuss the importance of the office lease agreement and how it can impact you. In addition to some key terms and provisions within your office lease agreement and what they mean. And fourthly, some tips and tricks, so to speak, of the trade. Some practical advice on negotiating a lease agreement, how to do it, when to do it, what to leverage. It's called the WIFM, what's in it for me. So when you have to think about it, it's what's in it for you as the dentist and what's in it for the landlord. Why should they renew your lease? Why are you a good tenant? So we're going to touch on some of these components just in a few minutes. Now, for those of you in Boston, so this is taken from an address in downtown Boston. So keep in mind, if you're in the suburbs, if you're outside, you're in Somerville, you're a little bit south or west, obviously a little bit different. So keep in mind, again, these can vary from block to block. But this is to give you an idea of downtown, some of the rental rates that they're seeing. So you may notice the dip with obviously COVID happening as well, COVID-19. Now, interestingly enough, it looks in the forecast, as many of you may have started to notice, some rental rates are actually increasing back up. So it really depends on your type of property, your type of landlord, and particularly the landlord situation. Now, obviously, there's been a massive spike in vacancy rates and specific types of businesses. So I'm sure many people in your plazas, you've noticed different businesses that are no longer there and how it alters the leverage that you have in order to get a better deal. And we'll touch on that component in a few minutes here. Now, in Burlington, Vermont, if you're looking at some of the average rental rates, again, it's ranging anywhere. If you're looking at the smack dab in the middle, it's a little over $20.25 a square foot. So some are going to range higher, some a little lower, depending on the type of plaza and the area. Manchester, New Hampshire, ranging anywhere right about the $16.80 a square foot. In Portland, right around just under $18 a square foot, so about $17 and call it 90 cents a square foot. Now, what you'll notice in some of these areas, Vermont, Maine, is there was a very little dip, if any, since COVID-19. Some of the bigger markets were hit a little bit harder with populations and things of that nature and shutdowns. So this is what I mean when I'm talking about it's very specific to your situation, exactly where you are. So not just New England, but specifically what town, what city, and what type of plaza. In Providence, it's hovering around $19.90 a square foot and has continued to rise through there. So it actually increased during COVID. In Bridgeport, so very similarly, a smaller dip. So it's down to the $16.60 a square foot. But if you notice vacancies, it's still decreasing. A slight increase, but still generally decreasing. Now, that's just to give you a bit of a snapshot in terms of rental rates and comparables. Again, very typically more specific on your actual address. Now, this is a question that I'm commonly asked throughout New England, and it really varies typically where you are. If you're kind of looking more of the Vermont, Maine, New Hampshire type of areas, and depending where you are in Massachusetts and Connecticut, should I buy my property or should I lease a space? Which one's better, Ryan? Which one should I choose? And there's pros and cons of each path. All depends on the individual, your goals, and your plans for what you're looking to do. So I'll go through a few things. On the buying side, requires a large upfront financial investment because you're not only building out a practice, but you're also purchasing a property. Now, just to take a quick step back here, I apologize to my sponsors who I forgot to mention at the beginning of the webinar. So we've been very kindly sponsored by Henry Schein and Bank of America this evening as well. So particularly for financial investment needs, if you have any questions on refinancing, any sort of build out loans, things of that nature, Stephen Green actually is on the call today. Many of you might be familiar with him. He is your contact there and will be able to walk you through anything that you possibly need to know about the financial side of it as well. So I do apologize, but welcome Henry Schein and Bank of America as well. When you also purchase a property, you become a landlord. So you're not only an owner of a practice and a small business, but as a landlord as well. So if you're a multi-tenant property, for example, you have to be also looking after your other tenants. Are you going to be maintaining the property, or do you have a property management company assist you? Or if the toilet breaks down, are you fixing it? You do have the ability to earn rental income, whether that's through your practice, through other types of tenants. Can be great. You have greater flexibility on how to use the space. So essentially, you don't need consent and permission from the landlord in order to make any sort of changes from the space. Freedom to control the property. So there's many that are old houses that are converted into a dental practice. So if you need to move how the configuration of the parking lot is, or add an extension to the house to add an operatory, whatever it might be, you have the freedom for it. You are the landlord, you are the property manager. So it can come with great benefits as well. Now keep in mind, this actually happened to a doctor in Massachusetts where they were an owner occupant in their building. And unfortunately, the town that they were located in, unfortunately took a big dive and was just no longer desirable. So the doctor relocated to the neighboring town, but unfortunately now he has this commercial real estate that's sitting empty that now he has to deal with in an undesirable space. So you're locked to your investment. The practice isn't open, you don't gain revenue. Now leasing requires a smaller upfront payment. You're only building out the practice. Requires greater working capital, or sorry, not requires, you have greater working capital. So you can put it towards the practice. If you want to increase the quality of your equipment or your plumbing, or buy that extra machine. Or one particular that's been a recent comment or conversation is opening up multiple practices. If you tie up all your capital in purchasing property, building out the practice, you don't have enough to be able to open other locations. In most cases, obviously. Now the flexibility to relocate or expand. So if the building becomes a little bit older, worn down, or the area, something happens, you have the ability to relocate and wash your hands clean. Or in those typical bigger buildings, you usually have at least at some point the opportunity to expand if you're bursting at the seams. Now, whether you're looking to buy or lease, again, can be a great return on investment in either case, depending on what you're looking to do and you as an individual. Now, either way, The critical aspect of both of these situations is the dental office lease. The lease is critical whether you rent your space, as it ties you to the location, or as an owner occupant, because it's part of the evaluation for your real estate and your practice. That separates the two entities. Now, how to maximize your leverage. What is a lease? The first and most basic is, what is a lease? You need to be able to understand what a lease is in order to properly talk about it. So a lease is the relationship, if you really boil it down, between yourself and the landlord. And it outlines what are the rules of that relationship. What are your obligations? What are the landlord's obligations? Now, most don't think about it, but when you sign a lease, it is the most expensive check you will ever write. When you sign a lease, it is the most expensive check you will ever write, because you're not just paying, for example, $5,000 a month in rent. You're paying, typically it's a 10-year term. So you're paying $5,000 a month for 10 years. And if we're including escalations, obviously higher. But if we're not, that's committing to $600,000 over the course of 10 years. Most dental practitioners don't look to relocate if they don't have to. The average is typically in and around 30 years for a dental career. Obviously some more, some less. So you're signing a lease to pay over $2 million in your career to the landlord. If you knew that before you signed your lease, would you have approached it differently? Would you have read every single line and every single word? So understand your lease. And no, you are the top tenant. I'm sure many of you have seen it now more than ever, where when you build out a space, you create a lot of value for it, depending on how big the space is, whether it's $200,000 to $700,000, depending on the size of the space, how much construction is needed. You add value to the space is the point. Secondly, you're long-standing tenants. In most cases, again, most dental practices don't look to move. They sign long-term leases and they stay long-term. Typically transition to another doctor who's planning to stay. That's a great tenant for the landlord. They don't need to go out and pay brokerage fees, market a space, negotiate leases, and hope that new tenant is going to work out. And you pay your rent on time. Dentists have the lowest default rate for it. So know that. And when you look around in your plaza, typically now, what you'll notice is there's a significant amount of vacancy. Yet, the dental practices are still there. Put yourself in the landlord's shoes. So this is what I was referring to earlier, where it's the what's in it for me. So what's in it for the landlord? Why should I ask for whether it's lower rents or a certain rental rate or certain legal language? What's in it for them? We're going to touch on that in a few minutes. But do the math. Again, as I was mentioning, what's your total occupancy expense or tenancy expense for the next 10, 20 years, if not longer, if you're planning to stay? Plan, prepare, and prioritize. Don't jump both feet into the pool. Plan first. What are you looking to do? What are your goals? What are your visions for the practice? Prepare. Okay, do your research on the lease. What needs to change? What does it mean? And then prioritize. Have the high priority items, medium priority items, and low priority items. Have your cake and eat it too. Because now might be the time to finally relocate. If you're in an older building or you just hate your space, now might be finally the time to relocate, where vacancies are increasing depending on where you are, which can also help induce landlords to draw you to their space. We might provide additional rent concessions, free rent fixturing, tenant improvement allowance, all things which we'll touch on in a few minutes. But why is the office lease so important? Particularly during COVID. Location, location, location. Your lease ties you to your location where you can see your patients. The investment cost to build. So as we talked about earlier, it's expensive. It can range anywhere from $150 a square foot, well above $300 a square foot to build out a practice. Obviously, depending on what the materials are, the quality, things of that nature. It's expensive. Very difficult, expensive, and time-consuming to move. Having to relocate a practice. So typically in my in-person seminar, I would ask, is anyone relocated? And what that process was like, how long it took, what you need to do. On average, to relocate a practice, it takes 18 to 24 months on average. By the time you just have the concept or idea that you need to relocate, through finding space, negotiating the lease, designs, architecture, construction, to doors open. Just from concept to idea to doors open. 18 to 24 months to do it properly. Typically, the longest part of it is finding the space or the proper space. You're not the only one who knows this. The landlord knows it as well. So timing is critical. So I've received a question here. So I am a dentist and landlord who rent out to an office to another dentist. Does your firm represent dental landlords as well? So in particular cases, we have for it as well, but it has to be very specific in terms of a dental landlord in helping facilitate that process. The short answer is yes, but it really depends on the specific situation in terms of if we can get involved or not. So I hope that answers your question. I'm happy to connect kind of separately on that, but yes. The lease can make or break the sale of your practice. Would you prefer it works as an asset or as a liability? Now, what should your office lease do? Well, first and foremost, it should provide fair and affordable financial terms. But I'm not just talking about rent. Rent is one component, a big one, but one component. Many of you are on what's called the triple net lease, whereby there's base rent plus additional rent, which is made up of taxes, insurance, and maintenance for the building. And you pay your proportionate share based on how much square footage you take up. Now, unfortunately, many landlords take advantage of this, particularly on the common area maintenance, the CAM charge section, and overcharge you for maintenance. So what we look to do for our clients is incorporate in essentially what's called detailed and itemized statements to ensure that you have a clear idea and full transparency in terms of what the landlord's charging you for and why. And the right to audit those statements. So to have your CPA review the books to make sure there's no funny business, essentially. So not all landlords do it, but there are some that do, unfortunately. So if you're thinking you're overpaying your triple net charges, this is a great way to find out. Free rent and fixturing. So these are components when you're starting up a practice or expanding practice, any sort of renovations where the landlord, as part of an inducement to have you move into the building or expand, will give you a fixturing period whereby you have time to construct the premises, but do not need to pay rent. And then once doors open, additional months of free rent to help alleviate some of the initial financial burden. So if you're not getting that, then you're losing out on money. tenant improvement allowance. So this is the allowance the landlord's willing to give you in order to help outfit the space. So most think more is better. Now, you want to keep in mind it's not free money. You want to know what the evaluation is that the landlord's baking right back into the rental rates you pay. It may be more beneficial to take a little bit less and maybe borrow more from Bank of America. Their interest rates are lower. Or if the landlord's giving you a good deal, maybe take more. But know what the evaluation is on it. Long-term stability and security. So taking a look and evaluate. If you're not looking to relocate, signing a long-term lease, typically we recommend a 10-year term with multiple 5-year options to renew, for at least 20 years of predictability in the space. In most cases, again, case by case. And that'll do a few things. A, secure the space long-term. B, it's like buying in bulk. You typically get a better deal. And C, it'll help facilitate the sale of the practice. As in most cases, banks typically need 10 years of term left on the lease in order to finance the acquisition for most buyers. And that's in the form of whether it's initial term and or options to renew, which we'll touch on the options in a few minutes. But you need to ensure you have term in order for the buyer to acquire financing. Minimize risk and exposure. So many of you on the webinar this evening have signed a personal guarantee or have signed the lease personally, whether you know it or not. Essentially what that means is if there was ever a dispute between yourself and the landlord, they can come after you personally. Maximizing your flexibility. So incorporating in items like a right of first refusal. There's two ways it can work, either to expand or to purchase. So throughout a large part of New England, there are owner occupants, or you've purchased into a practice, weren't able to purchase the property just yet due to financing. Maybe there wasn't enough capital, very common. But incorporating this in gives you the right. So if the landlord ever wants to sell, you have the first right to it. So it's the option, but not the obligation. And lastly, it can enhance the ability to sell your practice. Again, would you like it to work as an asset or a liability? Now, what is obviously a number of terms and conditions, but this is particularly one that many might be familiar with. It's called the option to renew, or also known as the option to extend. Essentially what it means is you have the option, but not the obligation to extend your lease further. So it's predictability for you, not necessarily for the landlord. Now this paragraph here is found in 90% of the leases we negotiate, and many of which have been previously negotiated by a quote unquote dental specific real estate attorney. It has this language in it. So typically in our seminar, I would have everyone take a minute and read it. Now given our webinar, and a little bit shorter, I know it's been a long day. I'll go through it, a couple of the items with you. So look for anything potentially problematic. And I hope when you began reading this section that you noticed in the very first few words, provided that Dr. Joe Black shall remain as tenant. Meaning, if Dr. Black sells the practice, the option is personal to Dr. Black and does not transfer to a buyer. Meaning the buyer cannot use this option to renew as predictable term and may not be able to get financing. Problematic to the sale. There's a doctor who had sent us the letter from their landlord they had received, and she had conditionally sold her practice predicated on her option transfer. She had negotiated a 5-year term with a 5-year option to renew with her local attorney. And what happened was, for the assignment, they needed the option to renew to transfer. And the landlord said, happy to, and wrote this letter back. I will allow for the lease to be transferred and to amend the lease and allow the option to transfer to the buyer for $120,000. $120,000. They really could have asked for anything because it's a change to the lease. Now, many landlords can be a little bit more savvy because Dr. Joe Black and having a name there is very obvious, or should be obvious. Many will have it as the original tenant. Exact same, non-transferable. Now, this is just one component of this paragraph that is problematic. There are many, many others that could impact the practice. So I highly encourage everyone to be very, very familiar with your option to renew and how it's structured, how rent is determined, how does it increase if it's market rent, am I due for an exponential increase in rents? Will it ever go down? Have I been held in default so it's null and void? It's a number of different components to it. The assignment section of your lease. The assignment section essentially outlines the transferability of your lease in the event that you look to sell the practice. So this again is found in 75% of the leases we review and negotiate. So again, we're negotiating over 500 leases each year. What it goes on to say, again, given the paragraph and the timing, it's been a long day, we'll kind of skip to some of it. So if you want to assign your lease and sell the practice, you need to have received the consent of the landlord first. You need their permission to assign the lease and sell the practice. Very common in commercial real estate. What's unusual about this is it just states that you need their consent, which means if it's a rainy day, they can deny your consent. Now, many have structured in the lease where it states which consent shall not be unreasonably withheld. And they believe that protects them. But the question being is, what's the definition of reason? Different for everybody. And unfortunately, this is where landlords leverage their consent. There's one of our more extreme situations that we're notified recently where the doctor had been in space for 36 years, was a quote unquote family friend with his landlord for 22 of them, patient of his, and he consensually sold his practice predicated on the lease transfer. He went to his landlord, family friend, as per his lease, to request the consent, and they said happy to, on one of three conditions. One, your rent goes up 35%. Two, you pay me 50% of sale proceeds, 50. Or three, I terminate your lease. What would you do? I can tell you they're not family friends anymore. There was a few choice words to be had, but unfortunately, it's what was structured in the lease. Now, in this particular case, this landlord would not even have to leverage their consent because this is typically how it's worded. They can either one, approve, two, decline, or three, terminate. How much is your practice worth if your lease is terminated? Many ask, well, why would they terminate? They're getting a good tenant. Maybe they want to repurpose the property or the space. Maybe they have another tenant that wants to pay more. Or maybe they want to terminate your lease and go do a direct deal with the incoming doctor to charge a premium on rent. It's pre-built. It goes on that had the right to revise minimum rent to the greater of the then current market rent or 15% greater. Essentially meaning the rent's going up at least 15%. How does that impact the price of the practice? Could it make the buyer walk away? Now it goes on to say, and I'll get this paragraph where this is essentially sale proceed language. What you'll typically see is some sort of consideration is the word that they use. So essentially any money that you make off of the practice sale, they're entitled to a percentage. And they'll argue, well, part of it is the location. Part of it is the leasehold improvements, which they own once affixed to the premises. Now, the situation I was talking to you about is one of our more extreme that we've heard of recently. Typically more common to hear about someone being leveraged for anywhere between 15 to 30% of sale proceeds. When in reality, there should be zero. Now it goes on to say, notwithstanding the consent, that even if they give consent, that you will remain liable for the lease obligations should the buyer default. And that is you personally, if you've signed a personal guarantee or personally signed the lease. And you'll notice is there's no expiry. There's a doctor I was speaking with at the end of 2017 who this actually practiced in Michigan, sold his practice, moved down to South Florida to retire, had received a call 8 years later. Buyer defaulted. Now, could these happen? Maybe not. But the point is, if they do, they become very, very expensive problems. Mitigate risk, exposures, and liabilities in your lease. Limit your liability personally, if not release. There's a number of different ways, and there's a number of different provisions that all tie to each other. Now, looking from a landlord standpoint, so for those on the webinar this evening that are owner occupants, think of it from the landlord side. Would it be attractive to a tenant if you had a termination right or sale proceed language in there? I would agree that you'd want consent, the ability to control who's in the space, 100% agree. But to maximize your practice or tenancy, it's a two-way street. So obviously there's some slight differentiations, but there are some that are the same if you really want to maximize your practice or your value for not only the property but the practice itself. There are other traps in the office lease, not limited to these. These are some of the main ones. So a demolition clause, essentially stating if God forbid, or sorry, if the property is up for redevelopment, the landlord has the right to terminate your lease. Typically, it's upon 30 days notice. There's some sort of notice period. What would you do if you received that? Or a relocation provision where the landlord has the ability to relocate you somewhere else on the property, the building, and make you pay for it. Or death and disability provision, which is essentially how we got our name 26 years ago, is God forbid something were to happen to you and you're no longer able to practice. You or your estate have the ability to either terminate the lease or assign it. It would skip a number of the assignment terms and conditions based on the extreme circumstances. Essentially works as a free insurance policy. But very, very critical to know what's in your lease. Now, landlord negotiation strategies. So as I mentioned earlier, some tips and tricks of the trade, if you will. So what's working? First question is, when do I start? We typically recommend, unless there's extenuating circumstances, to begin the renewal process at least 24 months out from expiry. sometimes 2.5 years, depending on the situation, but typically 24 months out from expiry. And that's for a few reasons. Leverage for you. As we discussed earlier, it takes on average 18 to 24 months to relocate a practice properly. So not only is your lease expiry a primary and critical date, your option to renew deadline is the other one. Sometimes it's 3 months notice, 6 months, 9, 12, or some sort of combination. The more time before that date, the more leverage you have. Because as soon as you pass it or have no options to renew, the landlord's just under no obligation to renew your lease. Not to say they won't, they're just not under obligation to. Completely different ballgame. Leverage your leverage. Again, you pay rent, you pay it on time, you have value in the space, the leasehold improvements. That's your value. Hold on to it. Because at the end of the day, you're looking for a nice space to see your patients, and they're looking for a good tenant who pays their bills. It's not a headache. You are that tenant. This lease should be fair for both sides. So there's a number of projects right now based on their areas. We're considering both. So what we're doing for those projects is, while we're negotiating the renewal, we're doing it at a certain pace while we simultaneously look at other options to see, is there a deal in another space for those that are just not necessarily the biggest fans of their current space, to see what else is out there, the high vacancies. Is there going to be another better deal on the line somewhere else? So we simultaneously evaluate. Know your KPIs, your key performance indicators. How much would it cost to move? How much would the landlord's involvement offset? If they were willing to provide more tenant improvement allowance, how would that impact the amount of patients I see, the number of new patients I receive a month, or walk-ins, or whatever type of marketing? How would it impact production? Essentially the long short of it. And when are you looking to transition? It's a big part of whether or not to relocate. Does it make sense? Or does it make sense to purchase that property? Are you going to receive an ROI, or return on investment on it based on your timelines? There's a lot of moving parts in it. Now, rent relief or deferral. So depending on how much lease term you have left, will vary in terms of what you might be able to get. Keep in mind, it's always a give and take. And what do? You take action. Plan, prepare, and prioritize. Now, critical dates and risk analysis. So this is one of the services that we provide, essentially a lease review. So to give everyone an idea what it entails, typically a $1,500 value, $1,495, and it's an economic and legal analysis of your lease, whereby we need a copy of your original lease, any extensions, amendments, estoppel certificates, assignment agreements if you purchase the practice, and we begin our due diligence, where our leasing team does their due diligence on rental rates, comparables to determine if you're overpaid in rent or if it's fair, while our legal team goes through the legal terms and provisions, highlights all the risks, exposures, and liabilities. We then schedule a call with you, typically about an hour long, and we go through everything in detail. So your goals, your visions for the practice, what you're looking to do, then the items in the lease and how they can impact you, essentially a treatment plan at the end. So a critical dates and risk analysis, or essentially a lease review. Now, this is also works for a lease consultation if you're looking to start up a practice or acquire a practice. If you don't have documents, we do walk you through what to expect and the various different components of it as well throughout in the meantime. If you're an owner occupant, if you have a lease, very similar obviously through the lease review. If you don't, we talk you through what type of lease and some different recommendation in terms of whether you prefer gross, modified gross, triple net, and the pros and cons and so forth through the various provisions as well. Or if you are looking to potentially expand, very relevant. Now, again, thank you to our sponsors this evening. from Henry Schein and Bank of America. So they've actually covered the cost for everybody to receive this complimentary. So thank you, Stephen Green, who's on, and our partners at Henry Schein as well. Again, highly encourage, if you have any questions regarding your situation, I'll be opening the floor right now. If you have anything a little bit more specific to it, highly encourage the lease review, or it's complimentary, there's no obligation, and it's really informative. We'll be able to do a deeper dive into your specific situation, what you're looking to do. For the owner occupant, for example, and your other tenant leases, we can look at your specific owner occupant lease as well as the other leases. Feedback from there as well. But for those of you that need to run, I know it's just approaching about 6:50 here. I'm sure many are hungry for dinner. If you weren't multitasking already through this and taking copious notes, certainly do appreciate you joining today. But I will open the floor now to questions. So one question here is referring to their lease. So they have 18 months left on their lease. Do I have enough leverage to make any sort of substantial changes? So whether you had 24 or you were month to month, which I hope no one on this call this evening is month to month, never recommended. On 30 days notice, you or the landlord can terminate the lease. Leaves you very exposed, but no, the max leverage is at 24 months. Now, it doesn't mean you don't have any leverage anywhere in between, month to month or 18 months, for example, but it changes the strategy for it. What I can tell you is the more time, the better. Hope that answers your question. Another one, is this a good time to expand my practice? There's a number of vacancies in my property. So absolutely, if your practice is booming, bursting at the seams, then absolutely a phenomenal time. We're working on a ton of expansion projects with the leverage that dental tenants have right now with it. So absolutely. Now, in terms of if it's right for your situation based on the rents you're paying, your area, obviously tough to say at this level, but if we're going through the lease review and reviewing it in detail, that'll be much obviously I'll be able to give a proper answer for that. How much do we cost if we wanted to be involved in lease negotiation? So great question. I typically get at least once through every single course, and it really depends on the scope of the project. I wish I could give you some sort of they're asking now a range. There is no range. Unfortunately, at this time, it really depends on the scope. The initial consultation, again, is covered by our partners at Bank of America and Henry Schein, but unfortunately, it's tough to say. It depends on the scope, what you're looking to do, what the quality of lease is, the situation. So I highly encourage, if that's the case and you've had a situation, send us your lease. We'll review it in the detail, and we'll be able to schedule a call with you to go through everything through the lease consultation. It also helps, and particular the reason for it is to help us give us an idea in terms of the scope of the work. This is how your solution is. This is the problem. This is what needs to be fixed. And then, if you want our help, we're happy to walk you through. If not, no problem. Any other questions at all? So again, as a reminder, if you are interested in the complimentary lease review, what I'll need is the original lease plus any sort of extensions, amendments, estoppel certificates, assignment agreements. You have the ability, whether you prefer to scan an email or fax them over. My email is below. Happy to send you the fax number if that's easier. My contact information's there. So if you have a quick question or a side question that you prefer instead, just let me know. Reach out. Happy to provide any guidance I can on any particular situations. But it's been a pleasure. I thank everyone for taking their time. I know it's been a busy day, busy week, and particularly with the holidays coming up. I hope you found the content of the webinar and the course insightful. Glad you're able to join. Appreciate it, and have a great night.